really bad shape. It's really having a tough time. And this is just what it is, right? This is something that we've talked about this for a while. I've let you guys know that what goes up does usually come down, and what goes down usually comes up. And this is where people like me, this is where we make our money. We step in and we explain what's going on and help you to get in a position where you not only can survive the storm, but you can actually benefit from the storm. You actually make money when the market goes down. I was talking to someone in my family actually about a fund that they'd created for he'd created a fund for his granddaughter where he put some money in a savings account for her for when she got older. And I said, well, why aren't you investing that money? That money needs to grow. And he said, well, that stock market, it'll crash on you. It'll crash on you. I said, yeah, it does crash, but that's when people make the most money. So people make money when the market crashes. And so you don't want to miss out on compound interest. It's very difficult to save your way to wealth. And it's really important to really understand that. You cannot save your way to wealth. You cannot work your way to wealth, not in America, not typically. You have to invest your way to wealth. And so investing is something that is done best, in my view, when the market is struggling like it is right now. Like right now, the market is in the middle of some chaos. And I'm gonna, if you give me 1 second, I'm gonna explain to you guys what's going on with the chaos, why it's happening. Put your questions in the Q&A section. If you can make the questions like one sentence, that would be good. And also, if you have any questions about stock options, we're going to save that. We're going to do a prime class meeting soon to talk about moves I'm making to generate income from stock options during this time. And it does require some portfolio adjustment, maybe rolling down some puts, maybe not selling calls on all your shares, or maybe even looking at that upside. It's really a matter of what your economic religion is. I tend to believe in reversals. Reversals tend to occur where such that when the market goes down, it usually comes back up. Usually when the market drops precipitously like this, the market tends to overreact. Remember, I explained to you guys the stock market is a drama queen. And so right now, the economic data is causing a little bit of alarm, and a 441 point drop, which is the drop to this point, shows me that the market's probably overreacting a little bit. And uh, so there we go. That's what's happening. All right. So one thing I'll say is in 1 second, I will also share with you an investment that I made. I'm a big believer in investing in like uranium and also just energy assets in general. And what I'll do is I'll share some of that in a second. All right, so let's talk about what's happening in the market right now. We're kind of having an epic nuclear meltdown. Um, and oh wow, I'm looking at CNBC and I see that there's a former aide to the New York governor Hochul who was charged as acting as a foreign agent for China. Ooh, China's they in there, ain't they? All right, so anyway, not that that's relevant. I'm not even gonna read that one, but it says here that the Dow tumbles by 400 points to start September as slowdown fears pick up. And so what this headline is basically saying to me is that there is a concern that about a recession. So a recession or a decline does not have to occur for the market to react to it. It does not actually have to happen. People just have to believe that it could happen. Just the possibility that it's going to happen, the increased probability that it's going to occur is enough to create a very real economic outcome. So the market regularly reacts to things that haven't happened yet or things that may never happen at all. This has happened already earlier this year where you had a major decline because there were these concerns because the inflation rate wiggled a little bit and there were some jobs numbers that were a little bit bad. And so the whole market just kind of went crazy. And this is in general because you have a pretty jittery stock market. The market's gains have been so enormous, so much money has been made that when that happens, you have just kind of this itchy trigger finger where any little thing can cause things to go wrong. And so if you're invested in a lot of these tech stocks like Nvidia, just know that that trigger finger is going to be the itchiest. Nvidia is one of those stocks where they're just watching it with like with the eye of a hawk. They're sitting there saying, "Okay, give us one piece of bad news and you're done. Just show me one sign of shakiness." Like, show me any form of possible instability, and we're gonna just body slam you. You're gonna lose $100 billion in market value just like that. And that's what you're dealing with right now. So basically, there was a lot of downward pressure as Nvidia. The darling that has captured investor attention dropped around 6%. So it looks like Nvidia has been getting killed pretty bad. Now, some of you may be asking me, is it a good time to buy Nvidia? That's a big question. That's a really big question. Let me just say this. There is an expert from Citibank that did believe, or where he claimed that Nvidia is a good buy right now. Um, I'm not, I'm not certain enough to tell you for sure that I think that it is, because basically Nvidia is so valued, so overvalued in such a way that everything with AI is going to have to go really well for Nvidia to justify its valuation, even at massive discounts. I'm looking at Nvidia right now, and let me see. It's up Nvidia stock. Let me see if I can pull up a chart here. Nvidia stock is, let's see, it dropped 7.6% today. And let me share my screen so we can kind of get a perspective on this. And I'm not here to tell you what to do. I don't give investing advice ever. And I want to make sure that's 100% clear, but I'll tell you what I think. So here, it's at 110. It's dropped 7.6% today. You go back 5 days, you've got this 11.8% decline, this big drop. I think that was the day of the earnings announcement. It had to be, yeah. And then here you go back a month, though, Nvidia has actually gone up by 10% this month. 6 months, it's gone up by 30%. The year to date, it's gone up 128%. The last year, it's gone up 127%. Last 5 years, it's gone up 2,366%. So, where I want to help you understand that perspective is everything, if you looked at the stock like this with a 1 day perspective, you say, oh my God, Nvidia is so cheap. I got to go buy some. Oh, wow, this is amazing. But if you look at Nvidia like this, you say, holy crap, this stock is on the top. They're on the edge of a mountain that's 10,000 feet in the air, and they're going to fall. And they could look at how far they have to fall, right? Because remember, this same stock was 31 cents on a split adjusted basis. It was 31 cents in 2010. It was 46 cents in 2014. As recently as 2017, it was $2.54. In 2019, it was $4.19. Now it's trading at 110 bucks. That, if you look at it in that perspective, is enormously high in terms of valuation. What happened here is that AI kind of came on board in 2022, and people are like, holy crap, AI is the driver behind, or sorry, NVIDIA is the driver behind this AI revolution. This AI revolution is going to make trillions of dollars. So companies started to invest heavily. They all started on the gold rush. They all started investing hundreds of billions of dollars in what they call CapEx, their capital expenditure, on this whole AI phenomenon. Well, the problem with that is that there are still doubters with the AI phenomenon. There are still people that are looking at AI and saying, okay, so you put $600 billion into this thing, but you've only made like 30 billion back. You've only made some fraction, 5% back on the money that you put in. This could be a mistake. We could be making these assumptions about AI that are not true. Now, what does that mean? Does that mean Nvidia goes bankrupt and they stop making money? No. Does it mean that they're not going to be making just a crap ton of money? No. It means they might make a crap ton minus a few hundred billion, right? So they're still going to make a crap ton of money, but it may not be as much of a big, it may not be a supersized crap ton. It might just be a regular sized crap ton. That leads to a massive drop in the stock price. That leads to a bust in this bubble. If you look at certain indicators on NVIDIA stock, certain things like price earnings ratio, which is the price divided by the earnings of the company. NVIDIA's price earnings ratio right now is about 51.8. That's right there. That's if you take the price of the stock, divide by the earnings. So you're taking, it's like taking the size of the car, divided by the size of the engine. 51.8 is a pretty high price earnings ratio. So this would argue that NVIDIA could be overpriced. Is that true? Nobody really knows. This is the weird part about stock market valuation. It's a very precise way to calculate a highly imprecise number. You understand? It's like predicting a football game, where you can go through all these metrics of how good the different players are on the teams and the team's records and the quality of the defense, quality of the offense, quality of the quarterback. But then when the game happens, you really don't know what's going to happen. but you have a lot of this information you can use to try to figure it out, but you still don't know, especially if the teams are evenly matched. So what I would say, I think someone asked like, what's a price point I'd buy Nvidia? It's not the price that it is right now. I am not buying Nvidia stock. I have not been buying Nvidia stock. I bought into Nvidia when it was like $5. That was when I bought my Nvidia. I have not adjusted that portfolio at all. I have not bought more. I haven't started selling or anything like that. I think I sold, maybe I sold a little bit or something, but for the most part, I want to ride the wave, but I don't believe that the hype is 100% real yet. It hasn't proven itself. And the tech stocks, Nvidia is part of what they call the Magnificent Seven. The Magnificent Seven, Apple, Amazon, Google, Netflix, stuff like that, Nvidia. The Magnificent Seven stocks are horrifically overvalued in the eyes of some. The Magnificent Seven stocks have a market valuation that exceeds something like the total market cap of all the stocks in all of Europe or something crazy like that. So these are the companies that if there is a downturn, these are the ones that are going to get body slammed first. These are the ones that are going to get killed. These are the ones that don't have a lot of room to run. That's what a lot of people, they don't believe they have a ton of room to run. Maybe they have a little bit. So let's say Nvidia drops from 110 to $99. Would I consider buying it? Maybe. But remember that there's thousands of stocks on the stock exchange that you can pick from. Why would I pick Nvidia? There are so many other stocks that are not paid attention to that you could buy that would have a higher ROI than Nvidia does. Don't get caught up in just focusing on the stocks that everybody's talking about. You want to also be talking about the stocks that nobody's talking about. So if you want to know one investment that I've been making recently, I've been investing in uranium because I just believe that there's like this whole energy shortage thing popping up, and there's a whole conversation about nuclear power being a solution to the whole AI energy issue. And there's a uranium ETF. I like ETFs; they're nice and safe. The ticker symbol is URA. URA. I've been buying some of that. That's something that I buy consistently. It's not something I think is going to give me a quick flip. It's just something that I want to buy more shares of right now because the market's down. So when the market's cheap, I buy. And also, right now, I bought a lot of stock this morning because I'd been sitting cash to the side for a while, hoping for a day like this. Like I was waiting for this day to happen. I was waiting for a day where everything was going to start collapsing because I didn't feel like that the good times were going to last forever. Right. So, what else? What's another investment? I'd say also I'm not sure where Bitcoin is right now. Let's look up the price of Bitcoin. I believe I'm a big believer in the long term prospects of Bitcoin. Let me see what the Bitcoin price is. I bet it's down today. Price of Bitcoin today. Yeah, Bitcoin's down 2.2%. Let me pull up the chart here so you guys can see it. So if you want my opinion and my thoughts, again, not investment advice, yeah, I'm gonna buy some Bitcoin. Look, Bitcoin's down, like down 6% this month. Last 6 months hasn't done so great. Year to date, it's up 30%. The last year, it's up 122%. Last 5 years, 451%. Maybe the Bitcoin ETFs, one of those ETFs might be a good move. So I think today might be a good day to look at some crypto also. These are the days where you buy. I don't tend to sell or pull cash out of my portfolio when the market's down. I tend to wait until the market goes up before I either sell things or drop or either whether it's selling options. Even I don't sell a lot of options when the market is down and because I want to be positioned for the upside. So I don't pull out a lot of cash and I don't sell a lot of stuff. I also don't buy a lot of puts when the market is down because puts cost more money during those times. I buy puts. I always try to think a step ahead, right? So I'll buy lots of puts when the market is way up. If everybody's having a party, I'm the guy in the back preparing for when the party's over, right? And when the party's over, I'm the guy who's in the front getting ready for the party because there's going to be a party. What tends to happen with the market in general is that right after you have massive declines like this in stock prices, you have some substantial probability that you're going to have a massive increase. Usually when you see the market just explode, that is usually after the market has dropped. So it looks like a big jump because you're coming from a reduced base, right? The prices have dropped. So so the percentages look enormous. And the thing about it is the media doesn't really cover that as much as they covered the decline. So I'm sure the media is going to talk all day about how the market just went south today. I'm going to read this article to tell you some of the fundamentals of what's happening, but I guarantee you that when the if there is a positive move in the market, which I believe there's a strong probability this is going to happen, the media won't cover that as much as they covered the decline. The bad news tends to get covered more than the good news. That's why your grandma's scared to invest in the stock market. So here it says stocks felt pressure as Nvidia, the high-flying artificial intelligence darling that has captured investor attention for more than a year, dropped around 6%. It was one of several semiconductor stocks, including Micron, KLA, and AMD, seeing declines in this session. So there's actually an ETF. Let's see, the Van Eck Semiconductor ETF that dropped more than 4%. The market also took a leg down Tuesday morning after two readings of manufacturing production showed signs of weakness. Okay, so manufacturing production's weak, so that says the economy could have some problems. Um, Reigniting concerns around slowing growth within the U.S. economy. This is a big concern. There's a belief that the U.S. economy is slowing down. What is happening on the bright side is that this means the Federal Reserve is locked and loaded. The Federal Reserve is preparing to do a rate cut. So the fact that this bad news is happening and the market's going down, one thing that goes through my mind is that most people think the Fed is going to reduce interest rates by a quarter point. If they surprise the world and say, we realize we need to go deeper and further, so we're going to do a half a point, then kaboom, you're going to make so much money because you're going to see your stocks just shoot up like crazy. So let's hope that the Fed overreacts a little bit or sees this as problematic data and makes a significant move. That would be really good for your stocks and good for your money. All right, so let's see here. S&P Globals showed a decline from July to August, while the Institute for Supply Chain Management came in under the level anticipated by economists. So they're looking at this economic data. It's coming in under expectations. That's not good. That's very bad. The market right now seems to be very jumpy to any data that comes in. Yes, that's true. Just like I mentioned earlier, this guy Larry Tantarelli, he's smart because he understands what I'm telling you guys, that the market's just jittery, and when it's jittery, it creates volatility. Volatility creates opportunity, but you cannot have the same jitteriness, whatever the hell I'm trying to say. You can't be as jittery as the market, right? So I compare the market to like our teenage daughters. I can't be as emotional as they are. They're very emotional. I have to be steady and stable. So the same thing is true as an investor. So basically he says we've become a data dependent market. So as the data's coming in, the market's reacting. Tuesday's moves kick off the new trading month after the three major averages finished August with gains. U.S. markets were closed Monday, blah, blah, blah. But for the momentum stocks, into September, but the momentum for stocks into September wasn't always expected. Concerns over the U.S. economy falling into a recession, along with the unwinding of a popular hedge fund trade involving the Japanese yen, sent stocks tumbling in early August. Y'all remember that? How many of you remember? Give me a yes if you remember when the market went south back in August. Anybody remember that? The market just went crazy and went bad. And I was saying kind of something similar to what I'm saying now, like just chill out, be cool, don't freak out. And then what happened after that? Anybody remember what happened right after that? What happened right after that? The market went berserk, right? So much money was made, it was ridiculous, right? So the thing is, you got to hold on, like In Vogue used to say, hold on to your love. You got to hold on to your stock, right? Because if you hold on and you can have the courage to maybe buy a little bit more, buy the dip, then you will make money. But here's the thing: there's no guarantee, though. See, when you buy the dip, and I want this to be clear, a lot of people think that buy the dip, buy the dip, buy the dip, buy the dip is always going to work. No, it doesn't always work. It does not always work. It doesn't always work. It's like if you have a person that you work with and they say, "Hey, I got to go home for 3 days. I'm going to be sick, but I'll be back on Friday." Most of the time, it's fine. Yeah, they're going to be sick for 3 days and then they're going to come back on Friday. But then there's always that possibility that they're not going to come back on Friday because they're sicker than they thought, right? Maybe they have pneumonia and they don't come back until next month. Or maybe they are dying and they're never coming back, right? So you always have to have that possibility in your head. So when you buy dips, you got to also be emotionally prepared for the fact that the dip ain't done dipping yet, that you're not dipping at the bottom. You're dipping somewhere that's far from the bottom, and that the dip could become a double dip or a triple dip, or that you could end up running into an all-out collapse. So this is why portfolio protection is important. We did that training I did with you guys on different ways to defend your portfolio, economic self-defense, stuff like that. Stormproof investing. Remember we talked about that. You can Google it. It's out there. Stormproof investing. Just search my name and stormproof investing, and I'll show you different ways to protect your portfolio. So generally speaking, I would say that in if you want to know my belief in terms of how to approach this kind of thing, it is prepare for the worst and hope for the best. So when I'm buying dips, I'm also looking at my put options and my portfolio protection mechanisms just in case the dip's not done dipping yet. Now, the good thing about the stock market, though, is that up until this point, throughout American history, over 100 and something years, the stock market has been in existence. The market has never dipped and never made a recovery. It's never, ever not recovered. And this is one of the certainties that you can lean on to convince your uncle that keeps telling you this, that the whole economy is going to collapse and all this other stuff. You can tell him, like, well, the stock market has never dropped and never recovered. And so if you're able to hold on to the recovery, a lot of money gets made. You want the dips to happen because the dips give you, as a smart investor, the opportunity to acquire assets from people who are too scared to hang on. Maybe maybe you like that pretty girl and you're waiting for her boyfriend to mess up and not realize what he's got. Or maybe you're waiting for that man to become single because his girlfriend don't see the value in him the way you do. I know that's silly. That's the terrible thing to do. Don't be sitting there stalking out somebody else's man. But still, same thing. You can't stalk out somebody else's stock. Like you can sit there, you have a stock that you want to buy. In options class, we talk about selling puts and stuff like that, or you just sit and wait. So today's your day. Today's your opportunity. I guarantee you that most stocks that you've been waiting to purchase are now on sale. They're now at a discount price. And the other thing I would say too is that patience is important, right? So if there is a stock you want to buy, like let's say you wanted to get in on Nvidia and it was going up and up and up and up and up, and you're getting frustrated and you want to buy it while it's going up, maybe you just sit on your cash and you wait for a day like this. And if you feel that today is a day that Nvidia stock is underpriced, then today might be a good day to get on board. I don't think buying today would be a huge mistake. But again, there's no guarantee the stock is going to keep going up. We could end up 3 years from now looking back and saying, man, we overestimated how the AI bubble was going to work out. We thought that it was going to do this and do that, and it didn't. But the thing is, like with the dot-com bubble, you had a big bubble burst. A lot of people lost a lot of money, but eventually the internet became what everyone thought it was going to be. They just sort of they knew they were going to move forward. They just didn't know which path it was going to take. So investing in dot coms was still a winning strategy, but there was about a year where it looked like a terrible strategy because the market had been beaten so badly. So remember, perspective is everything. You're not playing a 1 week game or a 2 week game or even a 1 year game. You're playing a 10 year game, a 20 year game, or at least a 5 year game. And if you think that way, then that's how you can sort of withstand the volatility. So today's a tough day. It says here in this article that this action comes ahead of the first major economic report of the month on Friday. So on Friday, the government is going to release the August jobs report. Okay. Wall Street will have to contend with seasonal headwinds such as September has been the worst month on average for the S&P 500 over the last 10 years. So the last 10 years, September, for whatever reason, has been a bad month. I have to look at the research to find out why. But I will say this, that says to me that September is the time to start buying. I saw Warren Buffett. Warren Buffett is such a weird guy. Let me tell you what I saw him do. So he goes to McDonald's every day. He drives like a raggedy hoopty and lives in a tiny little house. And this man is sitting on $168 billion in cash. That's not his investments. That's not what his assets. That's cash. That's money he's just got sitting there in a pile where he's waiting to buy something. Right? It's crazy. And he said, well, I go to McDonald's every morning, and some days I get the breakfast that's a dollar 99. But when the market's up, I splurge a little and I buy the 2.99 breakfast. I literally said, I'm not kidding. He literally said that, right? So basically, what he's basically saying is that he spends a little more money when the market's up. Now he's probably got some mental illness. Honestly, it's very weird to have $168 billion in cash and be worried about how much your egg McMuffin costs. But the point of that is that if you're talking about spending money, the time to spend is when prices are up and valuations are up, and you shave some off the top, and you take money to do whatever you want. Times like this are when you hunker down. Like it's like when the sun's out outside, I go out and I go running and I want to play in the front yard and I want to hang out and do stuff out and go to the beach and all that. But when it starts raining, I go inside the house and I wait out the storm. So going in the house might mean not being outside as much financially. That might mean going in the house might mean, okay, you know what? I was going to sell some stock and go put it down on the new car. I'm going to wait until the market reverses course. It might mean I was going to take some money out and go buy me a new coat. Maybe we save on the new coat so that we can keep that money, bring all the troops to bear. Right. In my view, your extra cash is kind of like I was explaining to a student this morning that it's like your financial fire department. It's there to put your fires out. So if you have cash sitting on the side, they're like little troops you can call to battle to help you to maybe avoid a margin call, or maybe help you to purchase that stock that you've been wanting to buy, or maybe it's going to help you to deal with something with your puts or your calls or whatever that you have to adjust. So you keeping that cash to the side. Part of the reason you do that is to prepare for days like this, because it not only can defend your portfolio and maintain ownership of your assets, but it can also help you take advantage of opportunities. Most rich people get rich because they buy things when they're cheap. They buy things when other people are not liquid. So that's how Warren Buffett and people like that get wealthy. They wait for somebody to have a liquidity event, meaning somebody who just has a valuable asset that they're sitting on, but they can't hold it down because they don't have the cash flow required to maintain that asset. He comes and he buys it for pennies on the dollar and then allows the asset to become what it's supposed to be, waits out the storm, and next thing you know, he's $1 billion richer. So that's what you want to be thinking about right now when the market's bad. This is not a bad day. This is a very good day. You just want to make sure you're patient. Now, what I'm going to do is answer a few more of your questions. Those who came in, if you wanted to know the assets I mentioned that I bought today, I bought some uranium global ETF. The Global X ETF. It's the ticker symbol is URA. URA. I bought that, and then also I think I'm going to get some Bitcoin as well. And then there also for those of you that are in the Black Stock Market program, there is a list called "What Dr. Boyce is Buying." You may want to go back through some of those releases I put out and check out some of those assets there. They're probably cheaper now than they were before. And today will be a great day, I think, to take a look. And don't be surprised if tomorrow you see a headline that says the market is up at some record high, or maybe it's later on this week. But then again, don't forget September is typically a bad month for the market, so nobody knows what's going to happen. And if that economic data on Friday is bad, the market could plummet further. But that is further complicated by the fact that the more the market drops, I believe that that increases the intensity of the Fed's response. So the Fed may come back with some economic medicine that makes the market stronger than ever because they're so concerned about this economic decline. So that's what I'm seeing. I hope that that's not confusing. I hope that that all makes sense. And then also, in case you want to know, in the Dr. Boyce Academy, I did create a class on estate planning essentials. So if you're interested in taking a look at that, it's self-contained. It's one time and you have it for life. So if you're, thinking about your legacy and trying to prepare in terms of trusts and estate planning and wills and all that, then I can send you guys the link. Just make sure you get on the email list. Maybe you can join the list for us by texting the word stock to 87948. So text stock to 87948. I'll send you guys a link later on today, and you can take a look at it if it'll help you. All right. So what I'm going to do is answer a few more questions. Okay. Robinhood, King Mace, can you explain stock lending, please? Yeah. Basically, King, whenever people sell stock short, they have to borrow the stock from someone else because you're selling something they don't own. So in order to sell something you don't own, you borrow it from someone else. So stock lending is where you say, I own this stock, but I'm not going to sell it. So I'll let you borrow the stock, just like I let you borrow my car or borrow my house or borrow my dog or something. Maybe you shouldn't let people borrow your dog. But yeah, and you can just use it. And then when you get done, just make sure you give it back and give me some interest in exchange for what I'm loaning you. So you loan them your stock, they pay you interest, and then they take the stock and they do other things with it. And really, truth is, when you put money in a bank, when you deposit money in the bank, that's what you're doing. You're loaning the bank your money because your money is not in that bank. About 90% of your money is not in the bank. But don't worry, you have FDIC insurance, so your money's pretty safe. But they're taking your money and they're doing other things with it. That's how banks make money. Karen, is there an app that kids under 18 can access to participate in the stock market? Isn't Um, Stash, doesn't Stash let you have an account for kids under 18? I think Stash can do it, right, Amani? Is that right, Amani? And Amani's in the chat, by the way. Amani is on our support team and she's awesome. So if you have any specific questions about anything in the Black Business School, you can talk to Amani there. You can also email her at support@theblackbusinessschool.com. Write that email address down. If you ever need anything from us at all, just email support@theblackbusinessschool.com. So yeah, Amani says yes, and I think that that answer was a yes. So maybe check Stash. That would be good. And also, as an FYI, we have the Black Investors Championship that's happening right now. I think we're in week 3, and we're going to release the leaderboard during Money in the Morning. I'll tell you guys about it. And so I hope you guys will join. We did something this morning at 10 a.m. I was ranting and raving about the fact that Black children, 66% of all Black children coming out of public schools don't even have basic fundamental reading, writing, and math skill, and only 3%. I didn't get to talk about this, but did y'all know this? That only 3% of Black children are even qualified to get a career in STEM. Isn't that crazy? Like literally, I mean, some of you are in STEM, some of you are engineers and scientists or medical doctors or nurses, things like that. Literally, only 3% of Black children have the basic math and science abilities required to even get a career in STEM. So it's crazy. I agree with you, Gabe. It's by design. And so, I believe we should educate our own kids. And in the Black Business School, we've got a lot of stuff. If you go to drboycebooks.com and you go to our children's section, we have flashcards, workbooks, all kinds of things, digital classes for children, things like that. So, I have a PhD in finance, so I can teach your kids everything about money. But also, I think what we need to do is we're going to bring in some teachers in some other fundamental areas like math and reading and all that, because I don't really believe we should just sit here and act like this is no big deal. Let me turn this light back on. Okay, it's not working. See, whenever I travel, I have trouble with lighting. It always gets really crazy. So, see, look at this, man. This is just tacky. My Lord. All right, so you know what I'm gonna do? I'm gonna turn off my camera so that I'm not sitting here looking like an ex murderer. All right, so Maurice says I would like to make $2,000 to $7,000 a week. Do you recommend someone saving up 100,000 and trading options on one or two stocks? Yeah, I think you could do that. I mean, I think you can make that amount. 2 to 7K per week. Yeah, selling options for sure. If you go to drboyceprime.com, that's drboyceprime, prime.com, you can take a look at what we're doing with selling options. There are plenty of people in the class that are making, $2,000 or $3,000 a week. And if you're a saver and you have a little money saved up and you want to understand the process of how to build that portfolio and protect it, I think this is a great time to get started because the stock is so cheap. So you get in there, you buy your stocks cheaply, and then you have the ability to sell options on that stock. But then also you have to be thoughtful about making adjustments as the market conditions change. And that's where I try to add value to the students is by talking to them about what I'm doing with my wife. My wife and I just sold some real estate. And the reason we sold the real estate is because I said to my wife, I said, okay, we got this condo and the condo went up in value. It wasn't expensive. It was like maybe 110. We bought it near the Obama Library. The price went up to about 150. The value went up about 3 years to 150. So we made 40 grand on it. But I said, if we take that same money and we buy this stock here, our income goes up threefold. And on top of that, we don't have to worry about dealing with being a landlord. Like me and my wife and I found out over time the hard way that we didn't enjoy all the bureaucracy. We're not good with like lots of paperwork and getting a toilet fixed in the middle of the night or dealing with a tenant who may or may not pay. And also the liability. Yes, thank you, Gabe. The liability, like somebody dies inside your unit, like that's an issue. So it doesn't know. So shout out to all the people that are into real estate. I love it. But I find that selling options gives us the income that we would make in real estate, actually more income without all the headaches and all the stress and all the extra work. I'm tired of working. I don't want to work for money anymore. I rather spend time with my family. So if that's of interest to you, feel free to go to drboyceprime.com. It's a very popular program. I know you're going to like it. Or also if you text the word money to the number 87948, there's a free training called How to Make Money Without Working. That's where you can get a glimpse of kind of what we do. So feel free to text the word money to 87948. All right, so let's see here. Next question is, Doc, what's your take on TSM? Michael Ruff is asking TSM. Is that Taiwan Semiconductor or am I getting that wrong? TSM is, yeah, Taiwan Semiconductor. Love it, love it, love it, love it. Did I say that I love it? Did I say that I love it? Did I mention that? In fact, I love TSM so much that You know what I'm doing right now? I'm literally logging into my E-Trade and I'm buying shares of TSM right now. So if you want to know what Dr. Boyce likes, I don't get me wrong. Again, this is not investing advice. I have to keep saying that so you guys understand that. But if you want to know what Dr. Boyce likes, he likes TSM, Taiwan Semiconductor. It's down 5.7% today. I'm going to the share price is $161 a share. So I'm going to buy some shares right this very second. And this just sort of shows you, like with stock buying, don't make a big deal out of it. Just get in there, buy it, and go on about your day. Like, don't, it doesn't have to be a religious experience or something that you think about for 8 years straight. Just make a move, make your move. The thing you want to be afraid of when it comes to investing is not making a move at all. That's what's going to lock you into a certain income stratosphere that you're not going to be able to break out of. So just go ahead and do it. Like, so I just bought shares of Taiwan Semiconductor. I'm not telling you to do it. This is not investing advice. I have to keep saying that, but I did buy it because it's a great company. And if I was to do like a quick analysis of it, I like it because number one, the analysts love it. Its price earnings ratio. Let's see, the market cap is $839 billion, so it's a big, strong company. Let's see what else. I'm going to read some descriptions of it. They engage in the manufacture and sale of integrated circuits and wafer semiconductor devices. Its chips are used in personal computers and peripheral products, information applications, wired and wireless communication systems, and automotive and industrial equipment. They are a big player in this industry. If you look at the research report, there's a whole research report on them inside of your Robinhood, where literally they talk about the thesis of the company. The thesis is that they are the world's largest dedicated contract chip manufacturer or foundry with over 60% market shares. What else? The fair value of the stock, literally, they're saying that the fair value, the current price of the stock is what, 150 something. They're claiming that again, this is just an opinion though. This is not fact. This is opinion. They said our base case fair value estimate is 213 US dollars, and they said so the current price, I think I bought it at 150 something. I gotta double check the price I just paid. Here, 161. So if they're correct, then this stock could be underpriced. Their economic moat, meaning the thing that protects them from other competitors, is from its cost advantage and intangible assets, which are realized from its leading position in process technology or nodes. So this chip industry is interesting because it takes years for companies to get started in that industry. It takes a lot of years. Their risk, you always want to think about the risk of any asset that you invest in. They operate in the semiconductor industry, which is one of the most cyclical industries out there, meaning they have ups and downs. They derive about a third of their revenue from the smartphone market. The industry alternates between shortages and oversupply. Foundries cannot always raise prices during shortages, yet have to deal with high fixed costs in all downturns. So that means that when there's a shortage, they can increase the price and benefit from the shortage, but they have to deal with high fixed costs even when there's a downturn. Compared to its peers, TSMC's earnings volatility was smaller, with no earnings per share decline larger than 20% in the past 10 years. So their revenue has been very, very stable. Very stable money. They expect this to continue as a result of the company's dominant share in high-end products and customers' preferences for TSMC. What they haven't discussed so far in the risk layout is the fact that they're in Taiwan, and China has a big beef with Taiwan. It's like Taiwan is like Tupac, and China is like Suge Knight. And Suge Knight is looking over at Pac and saying, "You better not ever leave Death Row Records, or something might happen to you." And so basically, China has claimed Taiwan. They're pretty much looking at Taiwan, saying, "We will come over here," or like Debo and Friday, like I got $5. No, I got $5, right? So basically, it's like, "Oh, you gonna eat your cornbread?" You remember that? And so China's kind of the big bully that feels that they have ownership over Taiwan and its resources. The United States is pretty much the only thing standing between China and coming over there and beating up Taiwan and taking all their stuff. So if this was to escalate in some sort of conflict, it would become very messy for anybody who invests in companies like Taiwan Semiconductor. So that's a risk factor that I personally am considering, but I think that the benefits outweigh the risk. And so if you want my opinion on Taiwan Semiconductor, I love it. I believe that if the market flips, like I think that it probably could, I strongly believe it just does this. The market tends to overreact because it's a drama queen. You will make money, in my opinion, with Taiwan Semiconductor very quickly. Again, this is not investing advice. This is just me putting my money where my mouth is. So let's see if we all make money together. Somebody bring that up in a couple of days if the market does do what I think it could actually do. All right, so let's answer a few more questions, a couple more questions. Then I got to get out of here, guys, because I'm looking at my schedule for today and it's a little bit full. I hope you all are going to come to the All Black National Convention. That's going to be October 25th to the 27th. It's going to be in Lombard, Illinois, right outside of Chicago. Our team has spent a whole year preparing this think tank for all intelligent Black people to gather, to get together, to know each other, connect with each other, like-minded people. If you have an interest in investing, then we got you. If you have an interest in healing and therapy, we got you. If you have an interest in building stronger families, we got you. If you have an interest in having intelligent political discussions beyond Democrat, Republican, we got you. If you love Black people, we got you. If you love our children, we got you. If you care about our families, we got you. So feel free to go to allblacknationalconvention.com. It's not going to be InvestFest. We're not going to have 20,000 people. We don't want that. It's going to be 600 or 700 of your play cousins all getting together and talking about how great Black people can be. So there won't be a bunch of celebrities. There won't be a bunch of commercial big corporations, none of that nonsense. No Democrat, Republican Party representatives, none of that stuff. Just Black people who care about our community, who want to build our families and make our people the best on earth at whatever we choose to do going forward. So feel free to go to allblacknationalconvention.com. You can check out the list of 60 experts we've gathered for the convention. I think you're going to really like it. And it's nice and intimate, and it's not so big as to be impersonal. It's deliberately going to be kept at that 600 to 700 person mark because we don't want all the people. We want the right people because the right people, you are the leaders. You are the talented 10th. You're the ones that I believe in. You're the ones that are going to get us out of this mess. Everybody else can just sort of follow us as we create the next generation of multimillionaires. All right, so a couple more questions and I'm going to bounce on out. Let's see. If I have a margin call and my puts are up on Coinbase, would you consider selling puts to cover the margin call? Yeah, that's why your puts are there. Your puts in your portfolio are your fire department. So you have your puts, which are kind of like, think about your puts like fruit that has water in it, right? And you're in the desert, you're really thirsty, and you got this cantaloupe or this coconut that you know is full of water and you're thirsty. So what do? You bust the coconut open and you drink some of the water in the coconut. So your puts have all this value stored in them. As your stocks have gone down, especially if you bought some of these stocks that are good for selling options and all that, then those stocks have been hit. So as those stocks go down, and we've talked about this, we've mentioned this a million times, like get ready for the storm, get ready for the storm. Winter is coming, winter's coming. Winter's here now, right? So now you go to your closet and you pull out your winter coat. Or you're now in the desert and you're a little bit thirsty. You need some liquidity. So what do? You can go to those puts and you can get some liquidity out. Now, what do? Do I sell puts in that situation? No, not necessarily. Because remember, in a down market, in my opinion, you want to uh, prepare for the worst and hope for the best. Or hope for the best and prepare for the worst. So what you're hoping for is that the market's going to do what it does in many of these occasions, which is flip and just start going up. That's what you're hoping for. But you may not get what you're hoping for. You may get a nightmare that's worse than the one that you might already be feeling by watching your stocks go down. I know this creates a lot of anxiety. It does that to everyone. So I don't take my puts away. I don't kill my puts. I don't sell my puts. I roll them down. Right. So what does that mean? That means that if I have a stock that's been trading at 12, I bought a put with a strike of 10, the stock drops to 9, then I reset my puts at maybe 7. Right. And by resetting my puts, what I'm doing is I'm selling the old put, getting the cash out, and then buying another put that's cheaper. And that cash comes into my portfolio to help me avoid a margin call. Now, the best way, honestly, to prevent a margin call is to not use all your money for investing, to save some liquidity for times like this, right? So if I've got 10,000 in my portfolio, I'm not gonna invest the whole 10,000. I'm gonna invest maybe 9,000 and keep 1,000 for margin call if I'm using margin. If you're using margin, you could get a margin call. If you're not using margin, then you can use all your money. It's not a big deal. But if you are using margin, you have to understand that a margin call is where you're basically stuck in a situation where either you got to sell your stock or come up with cash. And if you can't come up with cash, then that kind of sucks because you have to sell into a down market. I hate selling when everything's down. I'd rather sell when everything's up. So there we go. I don't sell the puts. I do a roll down. So anyway, by the way, so those of you that are in the options class, We are going to have a meeting soon. I am going to answer a bunch of your questions later on today, and I'll text you all. So if you'd like to be notified when we meet for stock options, just text the word options to 87948. Text options to 87948, and I'll let you guys know when we're going to meet for prime class. And by the way, for those of you who are wondering why you can't see me, it's because I turned off my video because I have no light and it looks just really bad. So anyway, all right, last question, then we're going to get out of here. Patricia Jones. She says, when I'm purchasing stock, should I always select market from the price type selection? You don't always have to do that. You can do like a limit order where you literally just say, I'll buy the stock if it's at this price or below. Right. So you could do that. A market order just means you're basically saying, like, even if the market price changes, I still want to buy it. Right. Because remember, when you place the order, that's not the price you're going to buy the stock for necessarily. They get your order and they take your order to the floor. And what can happen is that the price of the stock can change between the time you place the order and the time it gets to the floor. So a market order means you're basically saying, whatever happens, happens. Like if the price goes up a little bit, that's okay. Just give me my stock. But a limit order means you're putting a limit on what you're willing to pay. So that's the difference there. So it's really up to you to decide how you want to proceed with that. I typically do market orders because I just want to keep it simple, but I understand limit orders can also be beneficial for various reasons as well. So feel free, if you want to dig deeper into stocks and learn more about that, make sure log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com. There's a ton of information there on stock market investing. That's my specialty. That's what I wrote my dissertation on. That's something that hopefully I can help you with. Not investing advice, but it's something that I can tell you with complete certainty that the stock market is the number one wealth builder in America. So if you're not investing in the stock market, then you're missing out on a ton of possibility for your economic future and also for your kids. Also, a parent who wants their child to be rich, it's very easy to do. Just all you got to do is start buying stock for them on a consistent basis as early as possible, just like you're giving them a financial version of a multivitamin. You give them their financial multivitamins when they're a baby, and you do that consistently. Then by the time they grow up, they're going to be 6'8", 240 pounds, and be able to jump like LeBron James. But if you don't feed them, if you malnourish that child, or you don't give that child multivitamins or anything healthy while they're little, and instead you replace it with cheeseburgers and Twinkies, then you're going to have a short little dumpy fat kid that can't run 10 feet without passing out. That's not what you want. You want your children to be economically strong. You want them to be economic champions. So the way to make them champions is to give them their financial multivitamins at a very early age. Start that before they're born if you can. If you're going to have a child in 3 years, start investing for that child. Start investing for yourself, really. And then remember, wealth and capital, it's something you pass on, just like a car. Like right now, my wife and I, we just bought a new car for my wife, and we're giving my wife's old car to our teenage daughter because she's now old enough to drive. So it's not like we bought a car for her. We've never bought a car for her. We only bought a car for ourselves. Do you understand? We bought a car for ourselves. Now she gets to drive that car. Let me know if you get that analogy. I like analogies. Analogies make things plain. So we bought the car for ourselves. We used the car, and then now we're passing that down to her. That's a generational asset transfer. She can now use that car to go places and make money, right? So the same thing is true with your wealth. So when I say invest for your children, I'm really lying. I'm not really saying, not lying. It's not accurate. It's not, you're not investing for your children. I want you to invest for yourself. So even if you're a selfish bastard, which none of you are, because you're sitting here and you're thinking about your family's future, but even if you were a selfish bastard, you would still follow this instruction. Invest for yourself, and then you build that capital base over 20 or 30 years and that you've been enjoying it the entire time. You've enjoyed the financial security, you've enjoyed the economic peace, you've enjoyed the ability to buy things that you want, and then you just pass that asset to your children, just like we passed that Audi to our daughter, which I don't think a 16-year-old should be driving an Audi, but that is up to me and her mother to debate that. So anyway, that's it. That's the thing. These middle class kids, they never went through the struggle like us, so they all weak and soft and everything. But maybe I'm just being a cranky old man. All right, so I'm gonna get out of here, guys. I'm gonna check back in with you guys again soon. Again, if you want to be notified when we meet for stock options, just text the word options to 87948. I'll invite you into the Prime program, and you can take a look. I think you're gonna like what you see, and I'll follow up with you also on it's as the market, if the market recovers and all this other stuff. I'll keep you guys posted.